Hey tech enthusiasts! Today we're diving into the big buzz around the hot and toasty news about none other than Toast Inc. If you haven't been keeping up, Toast is the restaurant software provider that's been sizzling on the Nasdaq. So why is everyone talking about Toast today? Let's break it down. First up, Toast just got a major boost in its relative strength rating, shooting up from 71 to an impressive 82. Now for the uninitiated, RS rating is like the popularity contest of stocks, rated on a scale from 1 to 99. This score tells us how a stock's price performance stacks up against all the others over the last 52 weeks. Historically, stocks with an RS rating above 80 often end up being the prom kings and queens of the stock market. However, while Toast reclaimed its 50-day moving average, it hasn't hit a potential buy point just yet. So, keep your eyes peeled to see if this payment processing guru starts serving up a more enticing investment pattern soon. Toast ranks number 15 among its peers in the finance card payment processing industry group, trailing behind heavyweights like Kaspi.adr, Nuvei, and Paymenis Holdings. But wait, there's more. Toast is also catching a lot of attention from investors and analysis platforms. Zacks.com recently reported that Toast is one of the most searched for stocks on their site. Despite its recent performance dip, shares dropped 9.9% over the past month compared to the Zacks S&P 500 Composite's 3.6% rise. The excitement around Toast is stoked by its potential future prospects. Currently, Toast is sporting a Zacks Rank number 2, thanks to a stream of positive earnings estimate revisions. For those watching earnings, Toast reported a loss of 2 cents for the current quarter, which is an impressive improvement of 89.5% from the same quarter last year. Revenue growth is also looking promising, with the consensus sales estimate for the current quarter expected to be $1.23 billion, reflecting a 25.5% year-over-year increase. In the last reported quarter, Toast posted revenues of $1.08 billion, a 31.3% jump from the previous year, and beat the Zacks consensus estimate by 4.63%. Their EPS surprised folks as well, surpassing estimates by 6.25%. With sales estimates pointing to continued growth, Toast could soon find itself on a tasty upward trajectory. Toast has also been rated on valuation metrics and comes out slightly on the premium side, earning a D from the Zacks Value Style score. But if it can maintain its growth momentum and earnings surprises, this might be less of a concern for potential investors. Now it's your turn. What do you think about Toast's recent performance and its future prospects? Are you ready to take a bite, or do you need to see more before making your investment decision? Drop your thoughts, comments, and spicy takes below. We'd love to hear from you. Tech news, stock market, Toast Inc., investments, Header Finance. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.